Hello, welcome to the second edition of Markets Decoded. And like we had discussed last week, we were expecting a sell on rallies approach, and the markets that panned out, even despite the strong rally which we witnessed in the on the expiry day, still has tread into some kind of resistance. So you could call in the short squeeze. You could call in as a reason for the short squeeze, or you could also say the MSCI rebalancing, which actually could lead to some potential outflows. These were all the concerns that were seeping in, and that's why you saw that today the market, despite showing a positive trend on the expiry day, it still could not hold out. So I'm Raja Venkatraman. As part of the chart advice team, we are happy to share our analysis through this markets decoded approach. And in this video, I'll be showing you the week. I'm right now showing you the weekly chart of this Nifty chart, which you can see here. And what I have highlighted here is a value area where the Nifty has actually been resisting quite a bit. And despite brief attempts of revival, there is still not enough triggers which are helping the Nifty cross this zone. And that's why over the last few weeks, the Nifty has been consolidating at this region. And if you could look in deeper, we found out that the Nifty continues to respect the evaluation done last week. And we had suggested last time maintain a buy on dip, sell on rally approach. And you can now see in the Nifty that it has actually traded just above the median line, but it has not been able to successfully go beyond it. And you can now see here that if the median line which it is holding on right now, if it doesn't follow through, then you could actually be witnessing a very sharp fall. And we envisage a fall towards the point number 3, which is marked here, which is the lower channel of the pitchfork. Along this lower channel of the pitchfork, which we have marked here, is around the region of 10,350 to 10,370, and that could actually hold out as a support. And the other evidence which is kicking in is the 200 DMA line around the similar levels. So it's an interesting setup which is panning out for the next week, and we need to see what could actually help it rise higher. And there, Bank Nifty steps into the picture, and the Bank Nifty daily chart is risen into a strong median line resistance. And around this median lines, which we have marked as number 1, is also the 78.6 Fibonacci resistance level. So this was the level which the Bank Nifty could not surpass post the election, and the fall actually got into the 50% support of the pitchfork, and the subsequent revival from there has once again tested the same resistance zone. So now, after testing this resistance zone, what matters now is how it could actually take the way forward. With June 6th being the RBI policy, we need to see whether there are some guns firing on by the RBI governor and whether he could actually take the Bank Nifty beyond the median line. But the patterns and the resistance, an inside day pattern, which is clearly saying that the prices could halt here. Along with that, the weight of evidence is right now pointing towards Bank Nifty as the savior for the index. And with this scenario in place, we have to go into the next week with a cautious approach, and the onus is now on the Bank Nifty. So that's the cue on the Bank Nifty. And now we move on to the Nifty IT. The Nifty IT, which was roaring all guns with the INR weakening and also some strengthening of the dollar, is now finding some hesitation to go higher. And like last week, we had pointed out that there is emergence of some kind of resistance zone, and you could see here there's a weekly chart of Nifty IT, and definitely there is a resistance emerging here, and this could probably halt the Nifty IT. But then the component stocks are doing well, and one could actually be looking into the component stocks of the IT space, especially from the mid cap IT space. The stocks are definitely looking much better than the heavyweights. And you could see here that there is also some negative divergence emerging, and that could possibly be a halt right now, but setup is not yet confirmed. However, one needs to be cautious now in IT as well. So right now, in summary of all the three indices are that Bank Nifty looks to be the most promising indices for the coming week with the RBI policy in place. The Nifty IT is trading at resistance, and Nifty has got some work to do. So with that, I come to an end of my markets decoded. I hope that the summary of the indices were quite useful to you. And for those who are waiting for some stocks recommendation, I have a view. Last week, I had recommended a buy in Biocon, which did quite well, and it made a high of 685. And there was also a sell recommendation on BEML, and that trade also went out quite beautifully, where we saw a fall of more than 8 to 9%. Now, for the coming week, one could look at a short opportunity in Jubilant Food, and one could look for a long opportunity in KPIT. With that, thank you for watching. If you like our channel and you are also liking our videos, do subscribe and comment on our videos below, because it would help us to gain more crowd, and also people to take advantage of excellent analysis work which is done by Chart Advice, a company mentored by Dr. C.K. Narayan. Thank you so much.